Well, good afternoon, everyone. Happy New Year's coming up. Great to be here. We've had a great little chat going on. Welcome to you, everybody. Jay Richardson and Eva and Lawrence and Rojo and um, JD and everybody else. Appreciate you taking some time out of your, I'm sure, to be a busy day. Hopefully, everyone will be safe and happy for Happy New Year's. Very excited about our topic today. One of the things that I found really interesting when I first learned how to be an investor. This is stock investing for beginners. One of the hardest things to do as a beginning investor is to actually watch your stock go up and then watch it pull back a little bit and go up and pull back. And some of you were commenting in the chat today about where Santa. The markets were down a little bit today, and so it's challenging to be able to ride that trend. So the goal today is to teach you a method that some traders find really useful in helping them, stay with the trend. And in a nutshell, it's basically learning how to do some short-term profit-taking type of trades in the middle of that investment. And so I want to go through that today. We'll go through as many examples as we can, but before we get started, go over some important information here. And before we do that, give a shout out to Barb, who's in the chat. Appreciate her being there for us. If you have some questions today, go ahead and chat those into Barb. And now we'll take a look at our important information. The material that we cover today is for general informational and educational purposes only. Nothing that we talk about today is meant to be a recommendation. We're going to cover a few stocks. We're going to talk about a specific type of method of trading. Those are just for educational purposes. Schwab does not recommend the use of technical analysis as the sole means of investment research. We will be using the Paper Money platform, which is a simulated trading platform, very, very similar to the real trading platform in how it looks, but there are some differences as far as how trades are executed, so be aware of that. We'll be talking about some stop orders today. There's no guarantee that execution of a stop order will be at or even near the stop price if the stock gaps over. Also, be aware that all investing involves risk, and past performance is no guarantee of future results. If you're brand new to our class, this is we finished our Stock Investing for Beginners series, these 8 lessons about 2 weeks ago or 3 weeks ago, and I'll show you where those are in just a minute. But what I wanted to do today is one of the most common questions I get asked is, how do we take some profits? How do we sell different stocks? So I want to show you that method and kind of lock it in with that idea of, helping us to be a better longer term investor by being able to take some maybe short-term profits off the table. And so we'll get into that. Let me go ahead and share my desktop here. We'll take a look at our Trader Talks YouTube page. That series that I mentioned where we just finished, if you're brand new, this is like, I would say kind of appendix 2 or 3 to our lesson 8. But if you scroll down the page and just come down here to the Stock Investing Basics, right on the home page of our class, and I'll go ahead and chat this link in so you can, pull it up pretty easy. But if you go to the Stock Investing Basics, you can go through lesson 1, 2, 3, and so on. Go through all 8 of those lessons there, and then see that information. If you do post a question on any one of those archived webcasts, I'll go answer those. I look at those every single day. So if there's a question there from yesterday or this morning, I'll usually get that answered by the end of the day. So anyway, let's jump into our portfolio, our Paper Money portfolio, and take a look at some fun information. This is our open portfolio here, and my objective again today is to go through as many examples of kind of these short-term, what some people will call swing trades. Some people refer to them as bull flag trades. Some of them refer to them as just shorter term type of trades. But the question I want you to consider is, what do you think is hard about trading or staying with the trend? And so I just want to take a look at some of these positions we have over here. I have a P&L percent column. Today was obviously a down day. Almost everything was down in the portfolio today, but some of them have some decent profits. And one of the things that was so hard for me when I first started was, being able to let the trend continue or let the trend develop. So what I want to do is take a look at a few of the positions that we have inside our portfolio already that are setting up for what I consider a bounce trade. And I want to go through the mechanics of this trade with you. I want to teach you, some different targeting mechanisms that traders will use, to teach you a stop adjustment rule that people will use in these short-term trades, to hopefully, again, the goal here to help you maybe stay with the trend longer by putting some money in your pocket here and there along the trend. All right, you guys okay with that? All right, so let's jump in over here to the charts. The very first chart I want to look at is BAC. Now, BAC is a fairly new position for us. We got in and out. We've been back and forth in this one a little bit. But the very first thing I want you to get in your mind that I'm looking for is this idea. Let me just kind of draw it. I've got my drawing tool, but like what I'm looking for is the stock to go up and then pull back like this. So it's kind of an upside down check mark, but that's the picture I want to see on the right side of my chart is this, new high, and then usually about a 3 to 5 day pullback. So write that down in your notes. I'm gonna start filling this in as we go through here on the chart. Look for new high, okay, and about a 3 to 5 day pullback. Okay, that's what we're looking for. So let me get rid of these here. Now on BAC, do you guys see how this is here? Yeah, this is Eva's making a good point here. It says, add to good positions. That's a very common way to think about this, is we're kind of adding and subtracting. If the trend continues, that'll be the goal. But adding to positions. This is a technique that you could use to add to a position. It's also one that you could use to add and subtract, or take some of that short-term profits off the table. And here's the nutshell. Okay, it was a lot easier for me to watch my trending trades give back $1, $2, $5, $10 if I just had taken $100 and put it in my pocket from a previous shorter term trade. Does that make sense? It's like, okay, yeah, I'm not happy that BAC's pulled back here in my longer term portfolio, but that $2 pullback would have been a lot easier to weather the storm if I just took some profit off the table, right? So that's kind of the idea. All right, so we've got what we're looking for on our chart, and we have that over here. Now, the very first thing that is kind of fun to do with this is take your trend line drawing tool, and if you don't have that selected, you can go to drawing tools, click on the trend line, and here there's a couple cool features here. Very first one, I'm going to go over here to the settings. Okay, if you don't have this in your Thinkorswim charts, then you'll need to set this up. But you see where it says Snap Drawings Tool? This Snap Drawings tool, what it does is it tags your lines to the open, high, low, or close. That's what those OHLC means. And so you'll want to activate that. Usually it says none here. So change that to open, high, low, and close, and click OK. And then when you draw your line, watch this. Like if I click down here below, what we're going to do is now measure the previous move. Okay. So I can click really anywhere and it'll jump to the bottom there. And then I'm going to go right up here to the top, and I want to, be right exactly at the top there. And there's a setting on your drawing tool, but do you see how that's a $2.77 move? Does everybody see that? So I'm going to lock that line in, and then when I move my cursor over it, that box will pop back up. Okay, so on the right or left side here, I'm going to kind of take notes as we go through that you guys can copy down or review. But once we've identified that kind of upside down check mark, okay, the new high in the trend and the 3 to 5 day pullback, the first thing we're going to do, okay, measure previous move. Okay, measure previous move with trend line tool. Okay, so that's what we did here. All right. Now, let me ask you, and if you can, I'd really love to have you guys chat this in. I know Wiley's here, Eva's here. You guys, some of you have been here forever, so you'll know the answer to this. But this is just generally a very good question. What would have to happen tomorrow for you to buy BAC? Okay, and the answer could range anywhere from, well, I'm not ever buying BAC. Nothing could happen tomorrow to cause me to buy it, or it could be, well, I think I'm buying it now. It's above the 50-day moving average. But for some people, okay, and what we're going to do for our example, and all three of these examples we're going to try to look at today, is the answer is going to be the stock has to trade above the high of the low day. Okay, so two, identify entry signal. Okay, that's number two. So the entry signal we're going to use is if the stock trades, not closes, but if it trades above the high of the low day by 20 cents. All right. Now you're thinking, well, that'll be fine for a $50 stock, but what about a $500 stock? Well, for our examples on all three of these that are ranging in price, we're going to do 20 cents above. Now, you don't have to do that. You can pick your own number, but for our examples, we're just going to use 20 cents. Okay, so entry signal, okay, trade above high of low day, kind of that part of the hold. You heard that term before. High of the low day by 20 cents. All right, that's number two. Or yeah, that's our entry signal. Now, in order write this down in your notes somehow. Okay, write this down in your notes somewhere. Most short-term traders agree that a short-term trade not only should have a stop or a downside exit, but also should have a top side target. Okay, so I'm going to throw that out there as one of the beliefs of a short-term trader. Short-term trade should have stops and targets. You know, investments, trending trades, we don't know how long that trend will continue. So a lot of times we may not have an upside target, but you know, we'll probably have a downside exit. Okay, and again, you know, the stop's not guaranteed to get filled at whatever your stop price is, but you know, we'll talk about that more as we build this trade. All right. So I know the entry signal. You guys now help me out again. Okay, this day right here. Okay, the high, you have to look over here. In fact, let me jump this up a little bit. Okay, look and feel. Let's go larger on the font so we can see it maybe a little better. Okay, so this day right here, what we're going to look for is this H value. Okay, so that H value, do you guys see that? Is it 55.64? Does everybody see that? So based on the rules that we just talked about, where's the entry signal for this example? Okay, so this is a BAC example trade. Entry, okay, again, so the high is at 55.64, and so that would give us an entry at 55.84. Okay, everybody with me so far? Okay. So that's the setup now. The setup is this higher high and 3 to 5 day pullback. Here's another little term I want you to put down in your notes. The setup is what the stock looks like just before we get our entry signal. Okay, new high, 3-day pullback. All right, if it bounces tomorrow, which is actually today, because we're going to move the chart forward in a minute. Okay, this is as if it was this morning before the market opened. All right. Now, what else do we need? We got our entry signal, but we're doing a short-term trade to take some profit off the table if the trade works, to help us stay in this longer-term trend. Okay, so what else do we need here? What else do we need? Well, we need a target and we need a stop. So let's start with the stop. Now, this is going to be a very aggressive stop rule. We are only trying to trade this momentum like last time. You see where it pulled back 4 days and then just shot up for a few days? That's what we're trying to catch. If it doesn't do that, we're going to be out of this trade with a small loss very quickly, okay? But the stop in our little rule set here is going to just be 20 cents below the low of the low day, okay? 20 cents below low of low day, okay? So on this example then, we put our cursor back on that day. The low you can see is at 55.17. Does everybody see that? So the stop is going to be at 54.97. All right, 54.97. And let's just, this will be our example, so it's not really a 3. Okay, so number 2, identify the entry signal. Number 3, a 3 in this little example, identify stop. And then number 4, identify target. And we'll just clean this up a little bit here. So stop, just 20 cents, 20 cents below, low of low day. Target. Now, there's a couple different ways to do your target, but we measured, right? Measure the previous move. The target, now you can do this a couple different ways. Some people will take this little line and they'll right click on it and then they'll duplicate that. And then there's generally two kind of ways to do this. People will sometimes move the low, they'll put that at the very low of the low day because that's kind of how we measured it, was from low to high. So they might go from that low point and whatever the end is, that would be the target. Some people, a little more aggressive, will take, that measurement, that $2.77, and they'll add it to whatever their entry price is. Okay, so a couple different ways. We're going to be a little more conservative in ours, and we're going to go ahead and put our target is going to be $2.77, or that previous move added to the low. Okay, so previous move plus low of low day. Okay, so again, this is just a very systematic way. You guys can, modify this to however works best for you. I'm just giving you some guidelines on how some short-term traders will do this technique. Okay. All right. So previous move plus low. So let's do the math together. 55.17. So we need a target. So we have BAC entry stop. And now our target on this one, we're going to do 55.17 plus 277. And if I did my math right earlier, that gives us a target of 57.94. All right. And so what I would do is I'll see if it'll let me do this, because I don't want to show today yet, but I would just right click, duplicate that drawing, and then just pull it over here. But it's not letting me do it because there's no space over there. I'll show you here in a second. All right. Now, before we move on and before I place this order, are there any questions about this? I'm taking a look here. I like what Eva said. BAC doesn't pay the dividend, or it's not an aristocrat. I'm not doing anything on that one, which is fine. Some other questions coming through. So I don't see any other questions, but here's my question to you. Okay. Now that we've all got this planned out, we've planned our trade, we have our entry, we have our stop, and we have our target. Okay, the last thing really you need to do in this plan, determine investment amount or trade amount. And we're just using $500 in all our examples. It's technically up to 5% of a $10,000 portfolio, but that's kind of the guideline that we're doing for these stock investing for beginner. I mean, we're talking smaller portfolios, things like that. And so now we have our parameters, and we're just going to go place this trade. Now, you can actually right click right on the chart and do this. You could do a buy custom with OCO bracket, which is what I'll do. And that order will come up here. And so a couple ways you can do this. One, we can kind of position size first. If it's $54, but I'm getting in at 55.84. So let me show you how to build the trade first and how this works. So we said our entry is 55.84. Now, if I put 55.84 in here as a limit order, what's going to happen tomorrow? Well, the limit order says, Mr. Broker, I want you to buy this stock at $55.84 or lower. And so if the stock were to go down, it would buy it for us. And some people will say, well, isn't that better? Isn't a lower price better? Well, yeah, it depends, right? This trade, we're trying to catch the momentum when it shifts. So if it starts to trade above the high of the low day, then we're going to try to get in and catch the momentum. And hopefully we catch one of these really big green candles where the stock goes up, $1 or $2 or 1 or 3 or 4%, right, on a day. Okay. So, but we don't want to do it as a limit order. That's going to be a stop order. So that's kind of step one here. This is what's called a buy stop. and it says, Mr. Broker, stop, don't do anything until it hits 55.84, and then buy it for me at the market. Well, what does that mean? Well, that means buy it at the next available price. It could be, you know, near 55.84, but what if the stock opens up at like $60 the next day? That order would fill around $60. So we usually will say to ourselves, well, I don't want to pay too much for this. And so I'm going to do a buy stop limit order, and we're going to make that at 56.04. We'll give ourselves basically a 20-cent window. So if that gaps up above 56.04, it will activate the stop order and then puts a limit order out there, and the limit would have to be back below 56.04 to fill that order. Okay. So if we're going in there at $56, how many shares can I buy at 500 bucks? Is that 9 shares more or less? So I'm just going to bump this up to 9 shares, and we could do 9 shares at 56 bucks, and that would be pretty close to 500, I think. All right. So that's how we do our entry. Now, what about our target? Well, our target we said was 17 plus 277, or 57.94. Okay, so again, we're going to change this 57.94. And we said our stop was going to be 20 cents below today's low when we're planning the trade, which is 54.97. All right, and then we would want all of those to be good till canceled. And now we have our trade. We hit confirm and send, and we can review the order. You know, buy on a stop limit 55.84, and we just kind of double check our pricing. 55.84 looks good. You know, we're going to sell it at 57.94, okay, which is up there. And we're going to get out on the downside if it goes down below 54.97. Again, that's a stop order, no guaranteed to get filled right at that price. And then we're a little over $500, you know, that's close enough. And then if you have a group, I created a group for that called Stock Trades with Targets. And so we would throw that into that group and then just hit send order. Okay. Now I did all these orders I'm going to show you earlier today, and because the market fell back, I want to show you how to adjust them in a minute. Okay, but we went through that one fairly slowly, just to go through kind of the numbers. And so now what I want to do together is I want to go to the next example, and I want you guys to help me out. Okay, Citigroup. Again, good question to ask yourself. What would have to happen tomorrow for me to buy this stock? If you're a short-term trader and you're using our sample rules, you know, very first thing, okay, on the chart, did we get a new high in a 3 to 5 day pullback? Okay, new high, yep. 3-day pullback, yep. Okay, so we have kind of that picture, right? Let's go ahead to drawings again. Let's use that trend line tool, go from the bottom. Okay, we're measuring the move now. That was about 8 bars from the low to the high was $12.29. Do you guys see that? So sometimes what I like to do is I'll come in on my notes and I'll just write this down. So that was $12.29. I know I'm going to need that number in a minute on Citigroup. Now, what else do I need? Well, I need to know my entry price. Well, here's the low day. How do we know it's the low day? Well, it has the lowest low in the pullback, and so we would call that the low day, and the high of the low day is at 118.41. Okay, so where would our entry price be, okay, on this one based on those rules that we just covered, right? Where would it be? So 20 cents above the high of the low days at 118.61. So 118.61. Okay, how about our stop? We said our stop would be 20 cents below the low that day. And again, I know some of you are out there like, well, you're crazy. That stop's too tight. Well, it is very tight, but again, all we're trying to do is catch the momentum. One of the things that you'll notice is when the stock changes direction in a strong trend, it very rarely trades below the low of the previous day until when? Until the momentum's done and the stock starts to pull back again. Okay, so, you know, if we get in this and there's a lot of wiggle room and stuff going on, it gaps up, maybe fills our order in and then it sells off same day, yeah, we're going to get stopped out. Okay, but it'll be a very small loss, relatively speaking, but that's what our rule set is for this example. Okay, I'm not saying you have to do that, just what we're doing. So stop in this case, The low of the low day is 116.53. So our stop would be 116.33. Okay, how about target? Well, the target, again, if we use the previous move plus the low of the low day to identify our target, then we have our flag. Our previous move's 12.29. So our target would be what? Well, the low again is 116.53. And if we pull up our calculator, okay, 116.53 plus 12.29, I think it was. Okay, that gives us a target of 128.82. All right, you guys see all that? So that's how we plan this trade on Citigroup. And if it bounces tomorrow, that order would fill, and then we'll just try to ride it up to that high. Okay, so let me show you how to place this order on Citigroup just for the example. So we're going to right click. We're going to do a buy custom with OCO bracket. How many shares of this could we buy? Looks like maybe 3 shares of this one for 500, right? So 3 shares. Do we want a limit order here or a stop order or a stop limit? Okay, buy stop limit. Okay, we're going to put our entry trigger in here. Can't get it to go for me. All right, so our entry trigger, we said 118.61. We'll give it a little 20-cent window. If it gaps too far above that, then we just don't want to spend that money. 118.81 on the entry. That's our buy stop limit order. We're going to say we want our target to be up there at 128.82. And we're going to put our stop, we said, at 116.33. What else do we need to do here? Good till canceled. Hit confirm and send. It's not send and send, it's confirm and send, right? So buy 3 shares, buy stop limit. It's going to trigger 1861. It'll be a limit order at 1881. So it's got to be in between those prices to get filled. We have our target up there based on the previous move added to the low of the low day. We have our stop at 116.33, very, very tight stop. It's below the low of the low day. Guess what? If that order, if this buy order doesn't fill, this stop order doesn't become active. All right. We put it in our stock trades with targets and we would send that off. Okay. So that's that example I wanted to go through. And now I'm going to give you a homework assignment because I want to show you, and I don't have time to go through it because I want to show you how to adjust the orders because of what happened today. But here's the homework assignment. Okay. RTX. Let's go through these steps again. Okay. On the chart, look for a new high and about a 3 to 5 day pullback. Okay. We have a new high up there about 5 days ago, 4 days ago. 1, 2, 3, 4 day pullback. And so this one is setting up again for this type of trade. So for homework, you know, in your paper money, just go, you know, practice kind of these steps in your paper money. All right. And I don't know if it'll bounce or not. It didn't bounce today. But I do want to show you, you know, now on the next day for each one of these, because RTX went down. Okay, so here's kind of real time. RTX went down. Now, one question that comes up, put this in your notes somewhere. One question that comes up is, well, what if it's like a 6-day pullback, right? You said I have to wait for a 3 to 5 day pullback. What if it's a 6-day pullback? So here's kind of the rule of thumb. As long as the stock is still in a higher low scenario, like as long as this low of the low day in the pullback is higher than the last low in the short-term trend, we would call that a valid setup. So it might be 6 days, could be 7 days. Now, let me give you a little nuance. Ideally, okay, what do we know about old resistance? Ideally, the pullback will stay above the old resistance. The old resistance, we would really like to see it become new support. In fact, today's low is really close to that level. So if tomorrow it goes down again, that's probably still okay. But, you know, most short-term traders would really like to see that stay above that 182.28 level. Okay, so for homework, okay, just go through the numbers there on this one. All right, now let's go back over here to BAC. We just kind of went through this example, and BAC actually pulled back again today. So after you place the order, okay, and I placed all three of these orders this morning. Okay, they're all up here, RTX, City, pull that down a little bit, and BAC. I placed all those orders this morning, hopefully, or hoping that one of them would get filled so we could have an example of one that filled, but this is just as good, because now what do I do? Well, let's look at BAC again. Okay, so BAC, we just go back through the checklist. Okay, on the chart, do we still have a new high? Yep. Okay, do I have a 3 to 5 day pullback? Well, depending on how you count that, could be 4 red candles or 3, just, I'll say 4. So we're still sitting in that 4-day pullback. Is today's low higher than the last low in the trend? And I think we'd all agree it is. Now, this one's kind of interesting, though, is that our old kind of congestion level, the old highs and that last little move were up in this neighborhood, right? Let's draw a resistance line there, kind of in this neighborhood. And this is starting to get below that old resistance. Now, is it still a valid setup for this type of trade? Sure. Is it a concern? Yeah. Again, short-term traders would have really liked to see it hold this area. If we go in here, kind of where all these closing bodies are, we're kind of still in that neighborhood. And here's a little nuance. BAC, we used yesterday's candle for our trigger. Now we could still use today's candle. And the cool thing about today's candle is that the entry would still be back above this area. So let's go through on BAC and adjust the numbers, because we're going to redo the order, and that may be all we have time for today. Okay, BAC. Now, do I feel bad about not placing that order, or placing the order and it not filling? Absolutely not. How many times have you said to yourself, oh, I wish I bought that yesterday, or you just missed these nice, big, strong moves? Well, the reason we miss these moves a lot of times is we're just not prepared, right? We don't see what might happen in the future. We're waiting to see what happens. And so short-term traders, what they try to do is they try to see that setup, get that picture of that upside down check mark in their mind, and they think, okay, there's that picture. If it bounces, then I want to try to catch the momentum, and I'm willing to put some money at risk to do that. Okay, so this technique, not only will it help you become maybe a better longer-term investor, because you're able to take some of these short-term profit trades off the table, put some money in your pocket if they work. Obviously, if they don't, you're losing money on these too. But the point is there's some ways here that we can be better prepared to take our entries by getting ready to see the entry signal before it happens. Okay, so let's go through the numbers again. We have an order sitting on BAC, but now we're going to use a new low day. How do we know this is a new low day? Well, because today's low is lower than yesterday's low. Don't make this any more complicated than it is. Okay, today's a new low day, so now the new entry price is where? Well, today's high is at 55.42, so we're going to say our entry 55.62. Okay, how about our stop? Well, our stop rule hasn't changed. We're going to go 20 cents below the low of today. So 54.93 is today's low. The stop's going to be at 54.73. Okay, how about our target? Well, our target, our previous move hasn't changed, but where we're measuring it from. Now, here's that thing, right? Duplicate it. Watch this. If I put it like right underneath, that'll kind of give me a visual about where that target is. But we're just going to take 277 again, and we're going to add it to the low, which today is 54.93. So we're going to take our calculator. We're going to go 54.93 plus 277, that previous move. And our new target is going to be 57.70. Oops, it's a T for target, 57.70. All right, so now we've got our data here. So now we just go to the monitor trade or monitor tab and we find our order. Okay, so we're going to do a right click, and this is a little bit challenging because we have cancel replace order, or I can just cancel the OCO group, but we really have to change all of these. So there's a couple ways you can do this. So right click, I can do cancel replace the order here. and it comes across as a single order. So if I want to do it this way, I can do, first triggers OCO here in my advanced order, go up to monitor, and then just right click, cancel, replace that order, and then cancel, replace this order. Okay, so now I've got all 3 orders back in there again, and I can just now plug in the new numbers. For me, that's like a lot of extra work. So what I actually like to do is I'll just, look at my old order, know it's there, and I just cancel the order. And then I'll go to the chart and just redo it like we did before. Right click, buy custom with OCO bracket. It's a little bit less clicks. Okay, 9 shares again. Okay, what kind of order? Well, entries 55.62 now. Not a limit, but a buy stop limit. How high is our limit? 55.82. We give it like a 20-cent window. New target price we said was 57.70. New stop price we said 54.73. We want all those good till canceled. 9 shares, hit confirm and send. We just review the order. 55.62, correct. Stop 54.73, correct. Target 57.70, correct. Put it in the right group, and then we send that order off. And now I've got a new working order on that one. Okay. So let's see. Chris says, Scott, I'm seeing a rising wedge on BAC. Is it yet to confirm, or that would indicate a bearish formation? Yeah, I can see probably what you're saying, the rising wedge there on that. And it could be. One of the things that's really interesting about technical analysis, there's no guarantee this is going to go up and hit that the trend will continue. Now this is this is the last little thing I wanted to teach you today, is if this order fills, okay, our target you can see is still kind of forcing the stock to make a new high by using this type of target, but a kind of a common stop adjustment rule, and we'll make this number 6 here, okay, in our kind of our little notes. Stop adjustment. Move stop to break even. Okay, that means entry price. When stock closes above previous high. So Chris, you're making a great point here. Is this a rising wedge? Is the market going to tank in January? Nobody knows, right? What we do know is that in this case, if the stock goes up tomorrow and it trades above the high of the low day by 20 cents, that order will fill. Then the stop becomes active and the target becomes active. Okay, let me show you something else cool. Look, check this out. So if you click over here on your show orders, you can see all that stuff right on there. Here's your buy. Here's the sell for that new buy. Here's the target for that new buy. And so you can actually see those right on the chart. And if the stock continues to pull back, we can just keep placing this order until when? Well, until it makes a similar low or lower low, then it's not a valid setup anymore. Okay. So Mighty Mouse says I need to see how to set those stop orders. So yeah, go back and watch through this. I'm out of time here today, but this technique, again, the purpose of today's class is to help you find some ways in order to be a better longer-term investor, longer-term trader. One of the things that was so hard for me when I first started was, to buy a stock on our 2 green arrows or whatever your buy signal is, and then see some profit in my portfolio and then see that profit go away. That was really hard. And so it kind of mentally messed my head up and caused me to maybe take profits too early. And I don't know how many times I would go back a month later, 2 months later, 3 months later, and the stock that I owned and had shares of is now up 10, 20, 30%, but I didn't own it anymore. And it was because I got out too early. And I just found that for me and for a lot of shorter term investors, if they're able to put a little bit of money in their pocket on the table as the trend is developing, then that might help them become, a better longer term investor. And so, experiment with that, play with that a little bit in your paper money. I gave you some homework on RTX. Really all of these that we've reviewed, none of them bounced today. So all of them are valid bounce setups. Now we don't know if they'll fill or not, but take some time in your homework. You'll have some extra days over here to follow up. If you haven't had a chance to go back and watch those recordings for our webcast, go back to the Trader Talks page and pick up our, lesson 1 through 8. And there's Mighty Mouse. There are lesson number 4 page, and you can check those out. And hopefully this was helpful for you today. Oh, we still lose it. So have a great, happy New Year, everybody. Thank you for watching today, and we'll catch you next week. Thank you, everyone.